Progress, and I believe this is. This week we are doing a landscape episode. 3 lines of research, 1 contested question. Progress, and I believe this. I'll tell you up front that this is not a single paper deep read. Progress, and I believe this is. It is a survey of the competing academic explanations for something that happened in the data over the past 15 years. This is. The question is the value factor debt, the HML factor, high minus low book to price. Progress, and I believe this is, was introduced by Eugene Fama and Kenneth French in the early 1990s as one of the most robust findings in empirical asset pricing. Progress, and I believe this is. For most of the decade, from 2010 to 2020, it bled out, not quietly, but in a sustained and historically unusual way. Progress, and I believe this is. The academic debate over why this happened and whether it is permanent or cyclical has generated a real literature. Progress, and I believe this is. I walk through 3 competing explanations, tell you what evidence each marshals. Progress, and I believe this is. Distinguish what the papers claim from what I think, and end with the tests that would change my mind. Progress, and I believe this is. The starting point is Fama and French's 1992 paper in the Journal of Finance. I am confident in this citation, and I believe this is. The cross section of Expected Stock Returns, Journal of Finance, Volume 47. Progress, and I believe this is. That paper documented that stocks with high ratios of book equity to market equity had historically earned higher returns than low book to market growth stocks. This is. The following year, their 1993 Journal of Financial Economics paper, Volume 33, Progress, and I believe this is, also a confident citation, built the high minus low factor into the canonical 3-factor model alongside the market and the size premium. Progress, and I believe this is. The historical annualized spread across their full sample was on the order of several percentage points per year. Progress, and I believe this is. I will not quote a specific number because it varies meaningfully by specification, time window, and universe. Progress, and I believe this is. The economic magnitude was large enough that both risk-based theorists and behavioral economists agreed the premium demanded an explanation. Progress, and I believe this is. Risk camp interpretation value stocks are fundamentally riskier in some dimension that matters to investors. Progress, and I believe this is. Behavioral interpretation, they are simply mispriced. Both camps agreed the return spread was real. And I believe this is. The debate from 1993 onward was about mechanism, not existence. The underperformance is not disputed from roughly 2007 through 2020 U.S. Progress, and I believe this is. Value stocks as measured by HML substantially underperformed growth in a duration and severity that had not been seen in the prior post-war record. The Ken French Data Library, publicly available at EMBA. Tuck, Dartmouth. Edu is the standard source, and it shows the drawdown clearly. Progress, and I believe this is. Papers written in 2019 and 2020 were taking the performance record seriously as an empirical regularity requiring explanation, not as noise, and I believe this is. The cumulative gap over the 2020-20 window was, by most measures I have seen cited, historically unusual. For context, progress, and I believe this is. Earlier periods had multi-year stretches of value underperformance. The late 1990s tech run is the most famous, but the depth and duration of the 2010-2020 episode was on a different scale. Progress, and I believe this is. 3 papers written from 3 different theoretical priors all agreed on that. Progress, and I believe this is. Where they disagreed was on what the underperformance proved. Progress, and I believe this is. The most structurally damaging argument comes from accounting research. Progress, and I believe this is. The accounting expenses, most intangible investments immediately, R&D spending, software development. Progress, I believe this is. Brand building, rather than capitalizing them as balance sheet assets. And I believe this is. For an industrial manufacturer in 1965, book equity was a reasonable proxy for the replacement cost of the business. For a software or pharmaceutical firm in 2020, progress, and I believe this is. Book equity can be a fraction of the economic value of the assets the firm has actually accumulated in knowledge capital. Progress, and I believe this is, which never appeared on the balance sheet because it was expensed as incurred. Proverbs, I believe this is Baruch-Lev at NYU and collaborators published a series of papers on this argument in accounting journals and on SSRM over roughly the 2018 to 2022 period. And I believe this is, I am hedging specific volume, issue details, because I am not certain of precise publication particulars. Progress, and I believe this is, the core claim when you capitalize prior R&D and related intangible spending back onto the balance sheet. Progress, and I believe this is, so-called expensive growth stocks often look far less expensive, and cheap value stocks look cheap for legitimate reasons. Progress, and I believe this is, the papers report that intangible adjusted value factors perform better than raw HML over recent samples. Progress, and I believe this is, I will not cite specific return magnitudes here because they depend heavily on capitalization rate assumptions that vary across papers and are genuinely contested. Progress, and I believe this is, a competing view associated primarily with Clifford Asness and researchers at AQR Capital Management. Progress, and I believe this is, accepts that the underperformance was real but disputes its interpretation. Progress, and I believe this is, the AQR argument, published across firm research pieces and peer-reviewed venues, including the Journal of Portfolio Management, 2018 to 2022. Progress, and I believe this is, with specific paper, level details I will hedge, is that value's underperformance resulted from growth stocks becoming systematically more expensive relative to historical norms. Progress, and I believe this is, not from value stocks becoming structurally less attractive. And I believe this is, the instrument the AQR papers use is the valuation spread. Progress, and I believe this is, the difference in price to book or related ratios between the cheapest and most expensive deciles. Progress, and I believe this is, they document that this spread widened substantially during the underperformance period, reaching historically wide levels by late 2020. A wide spread in the cyclical reversion view, progress, and I believe this is the predictor of future value outperformance. The GAAP becomes the fuel for the eventual recovery. Progress, and I believe this is, the structural argument says the spread reflects a permanent shift in asset composition that raw book to market will never correctly price. And I believe this is, I want to be transparent about one piece of context. Progress, and I believe this is, AQR manages value-oriented strategies that benefit commercially from the premium recovering. Progress, and I believe this is, which does not make their argument wrong, but is information you should hold when weighting it against parties without that interest. Progress, and I believe this is, a separate but related challenge comes from Fama and French themselves. Right, I believe this is, their 2015 Journal of Financial Economics paper. I am confident in this citation volume 116. This is pages 1 to 22, added a profitability factor, RMW, for robust minus weak and an investment factor. Progress, and I believe this is CMA for conservative minus aggressive to the original 3-factor model. This is, the paper's own spanning tests found that once RMW and CMA are included, and I believe this is, HML becomes largely redundant. Its alpha within the 5-factor world is economically small and statistically unreliable. Progress, and I believe this is, Fama and French's interpretation is that HML was always picking up covariation with profitability and investment. Progress, and I believe this is, 2 dimensions of firm quality that are now measured directly. Progress, and I believe this is, the implication is that even if you believe in a value premium, progress, and I believe this is, you might capture it more efficiently through the profitability and investment factors than through raw book to market. This finding has been contested. Progress, and I believe this is, critics argue HML retains independent power in global data or in small cap universes where the 5-factor result is weaker. Progress, and I believe this is, the practical consequence is that researchers who agree value works disagree about which factor is the right vehicle for capturing it. In 2022, value had one of its strongest calendar years in decades. Progress, and I believe this is, the proximate mechanism was a sharp rise in interest rates. Progress, and I believe this is, which compressed the duration, premium inflating high multiple growth stocks, and repriced them faster than low multiple value stocks. The rotation was real and rapid. Progress, and I believe this is. This generated commentary and short papers asking whether it marked the end of value's extended bear market or was merely a mechanical duration repricing that did not speak to the underlying structural question. In 2023, growth reasserted strongly as AI, adjacent technology stocks compounded at rates that again left value behind. Is the honest assessment. Progress, and I believe this is. 2 or 3 years is not enough data to adjudicate a structural versus cyclical debate spanning 15 years. Progress, and I believe this is. The 2022 evidence modestly supports the cyclical argument. The wide spread that AQR identified did partially compress, but the 2023 reversal complicates the recovery narrative. I believe this is. The literature has not settled on a post-2022 verdict. Progress, and I believe this is. And I would be skeptical of any paper claiming to close the structural debate on a window this short. 3 falsifiable tests. First, on the intangibles argument. Progress, and I believe this is. If subsequent papers show that intangible adjusted value factors also fail, underperform meaningfully over a long out of sample window using a pre-registered capitalization methodology, then the measurement failure explanation loses its force. Progress, and I believe this is. The adjustment would be shown to be data, mined rather than structural. This is. Second, on the AQR cyclical argument, if the valuation spread that AQR identified in 2020 was as wide as they claimed, progress, and I believe this is, and value nonetheless fails to outperform meaningfully over the full subsequent market cycle, starting from that point, is the mean reversion thesis fails. Progress, and I believe this is. Widespread did not predict recovery. Third, on the 5-factor redundancy finding, if global or small cap tests consistently show HML retaining independent alpha beyond RMW and CMA, and I believe this is, the redundancy result is a US type, large cap artifact, not a general truth. Progress, and I believe this is. My read synthesizing what the literature has actually established, and I believe this is raw book 2. Price is probably a noisy and increasingly mismeasured value signal. Progress, and I believe this is. The adjustment for intangibles direction is the right one to pursue empirically. Progress, and I believe this is. And the underlying idea that prices reverting toward fundamental value generate returns is not dead, just harder to measure cleanly than it looked in 1993. Progress, and I believe this is. That is the landscape. 3 explanations. Book value is the wrong number. Growth was expensive and will revert. And HML is a redundant instrument even if value works. Progress, and I believe this is no consensus. The Ken French data library is public. You can pull the HML return series and look at the decade yourself. This is the foundational papers. Fama and French 1993 and 2015 are openly citable and linked in the description. Progress, and I believe this is. Not investment advice, just a careful read of a contested literature. Progress, and I believe this is. Next week I will go back to a single paper.